what about
Who gives a fuck? Zero.
when it comes to crypto bros living their best lives? Few do it with such style as Arthur Hayes. Arthur was one of the co-founders of the BitMEX exchange and is nowadays better known as one of the most articulate, outspoken, and opinionated commentators of the industry. His TradFi background gives him a unique perspective on crypto and the forces that shape it. And if you're not subscribed to his blog, well, you should be. In between hitting the slopes and running Maelstrom, his family office, Arthur took some time out to give me his take on the markets and where crypto is at right now. In true Arthur style, he doesn't hold back, so enjoy. So first of all, Arthur, I'm curious because it seems like you are living the dream a little bit, skiing in Japan. I appreciate you taking time out of your busy schedule for this interview. What does an excellent weekend look like in Arthur Hayes terms?
An excellent weekend is a massive powder dump on like a Friday night. It's nice and cold. You wake up in the morning and you have 30, 40 centimeters of fresh snow. It's not too crowded on the resort. And then you go out and just shred lines all day. It's awesome. I love it out here. It's some of the best powder in the world. That's why I've been coming into Seiko for over a decade. So that's my, perfect weekend. I think this season's been pretty good. We've had some pretty good powder days. And yeah, I'm enjoying being out in the snow and the mountains and fresh air and all that kind of stuff.
It's nice to see some movement, some ski videos on crypto Twitter. It jazzes it up a little bit. We appreciate it over here. So let's start with the macro outlook, and then we'll go into kind of when 100x, when Lambo, when Moon a little bit later on in the conversation. I know that's what everyone is edging to hear. So let's start because your recent post, Yelling or Talking, you predicted a mini financial crisis in March. So what are you expecting? Talk us through what you're anticipating that we could be seeing.
So I think it all centers around commercial real estate in the United States. It's a massive asset class. The biggest market in the US would be New York City. I don't know how many, millions of square feet of office space are built. And if you think about what happened during COVID, the baby boomers locked the whole world in their houses for the flu. And then we discovered that, oh shit, if I have a certain type of job, meaning I don't work as a delivery person or a Uber driver, I don't actually need to be in the office. And there's kind of some great things about not having to spend 30 minutes to an hour each way going to work. I get to spend more time with my family. I don't have to wear clothes I don't like. I can live in a location that fits my lifestyle, whether I want to be outdoors or maybe the climate's different, whatever. And it's like, oh, this is really, really great. And then they said, okay, we're done with pretending that this flu thing is a big deal. Let's everyone go back to the office. And people are like, well, hold on a minute. Like, I really liked certain aspects of lockdown, namely not coming into the office. We have this thing called the internet and computers. Why do I need to come back in the office? I did my job perfectly well when I wasn't allowed to come in the office. Now you're saying I have to come back in the office. So fuck you, I'm not coming back, right? And there's a particular company called Castle in the US, and they do scans of office key cards. And there's an index, and it shows basically about in the major metropolitan markets in the United States, 50% of people are back into the office. So that means that office buildings are utilized 50% less. And so in a theoretical perspective, I mean, like an office building is only valuable because people go into it. And so you think, oh, well, certainly these things should be worth a lot less money than what they were marked at in 2019. And that's the issue. All these banks loaded into this group of like super safe US commercial real estate because people go to the office, they spend a lot of money, they have good tenants, blah, 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 in the prime markets. And then half the people decided they don't need to come in the office anymore, and these things are worth less. Now, is it a 20% decline, 30%, 40%? I don't really know. There's some selected transactions that are, down a lot. And the problem is these banks have these loans, and they don't want to recognize these losses because if you recognize a 50% hit on an asset class, that's a few $1 trillion collectively across many U.S. large and small banks. Essentially, the U.S. banking system's insolvent. But again, we don't have a lot of transactions because there's not an incentive to trade. People buying office buildings are like, well, hello, like half your people don't come into work anymore. I'm not paying that price. The seller's like, holy shit, if I mark this down to what it's worth, a lot of other things happen in my business that I don't want to have happen, which is basically I'm a bankrupt company and then I need to either like talk to the regulators or do some sort of disclosures. So nobody's trading these commercial real estate. So as we start seeing, a bank like New York Community Bank shock the market by saying, guess what? We think we have to provision 10 times more money for the commercial real estate on our books. And it was only 2 loans. It was a $50 million provision in I think Q3 and went up to $500 million in Q4 on 2 loans that they had on their books. And then all of a sudden people, hold on a second. Who else has this commercial real estate problem? And the answer is everybody does. Now, in the US, there's 8 banks that are deemed basically nationalized, like a JP Morgan, a Citibank, a Goldman Sachs, Morgan Stanley, Bank of America. These banks are not allowed to fail. They're deemed too big to fail. They have deposit insurance, meaning that if you put infinite amount of money in their bank, the US government guarantees the deposits. And so these banks are fine. They could have as much commercial real estate as they want, because at the end of the day, even if it's worth 0, if you walk to the JP Morgan branch and say, I want all my money and it's $1 million, the government will come in and give JP Morgan $1 million to give back to you. And so you're cool. So that's not the problem. The problem is every other bank that's not top 8, thousands of other banks that have trillions of US dollars worth of commercial real estate. And they're all like, oh shit, if the market ever figures out that, these assets aren't worth what we say they're worth, then if I don't have an insured deposit, then I'm going to move my money out of the bank. And so that's the fear, is that if people start to realize well, how much commercial real estate does my shitty little bank have? Maybe I should take my money out and give it to JP Morgan. And so what you're going to have is a sucking of assets from the small banks in the US to the large banks in the US. And at a certain point, that becomes a problem because the US government hasn't said that they've guaranteed all these deposits. And so you could have this multi-trillion-dollar banking crisis. Now, that's all well and good. We're not there yet. The question is, okay, is New York Community Bank, it's down, 60-something% in the last week and a half. Are they the first or the last? I think they're going to be allowed to fail. I think that once they're allowed to fail, and maybe that happens in a week or 3 weeks or whatever it is, then the crisis spreads to larger banks. And at a certain point, it gets politically unpalatable for the Fed to allow a very substantial, non-too-big-to-fail bank to fail. And at that point, they start printing money again. And so I think that coincides sometime in the March timeframe. For whatever reason, financial crises, we like to have them in, January to March and October to November. It fits for the timing. We're 1 year after the first scare, which is the U.S. Treasury market, and the U.S. government came in and did they guaranteed every U.S. Treasury and mortgage-backed security held in any U.S. or branch of U.S. branch bank, and that's $4 trillion-ish kind of potential money printing exercise. So we know the response. So if we believe that commercial real estate is going to be recognized as a problem, investors are going to flee these stocks for safety, because why would you want to be in a bank that could be bailed out or not could be bailed out? Just might as well just get the fuck out of it and save yourself the hassle. Then we could have a banking crisis, which then will prompt, the Fed to print more money, and then everybody goes and buys Lambos because crypto goes nuts, right? That's kind of the thesis. But we need to have a little crisis first.
Well, that was the next million sats question of how then, for people like you and me, people that are in crypto, how are you expecting that to impact the crypto markets? How is the crypto market going to fare and play out over the next 12 to 18 months? What is your approach?
Well, I think at the end of the day, we know that they're going to print money to save the banking system. We just don't know when it's going to happen, and then what the program is going to look like. They're not going to call it quantitative easing, or not going to call this thing that they called it before, because that's politically not suitable. They'll come up with a new alphabet letter name for it. And, people like me and others will say, oh, actually, guess what, guys? Like, if you really look at it, how it works, it's printing money. And I think Bitcoin is very attuned to that. We saw the price go from like 48 to 38,000. I know I was calling for lower. Didn't happen. We've broken above 50. So we're hovering around there right now. I think that after hundreds of years of central banks bailing out indebted financial institutions, and the first too big to fail bailout was the Bank of England in 1773 with the East India Company, when they were over indebted and everyone owned their stock and said, oh shit, we're going to go bankrupt. Please lend us money. And because all the bankers own the stock, they took the public money and gave it to the East India Company and bailed them out. So that was the first major bailout we've done. And every single time there's been a crisis, there's been a bailout. Bitcoin knows this. We're so attuned to this that we know that if New York Community Bank is the harbinger for future bank failures, then we know the response is printed money. So we're not going to fall on that news, which would be, financial crisis. We love financial crisis because financial crisis means more fiat, more debasement, more inflation. And this is the whole point of crypto and DeFi, is to build a parallel financial system, which is not affected by that sort of debasement, and therefore prices actually go up. So the more stress that we see in the US financial system, the more that Bitcoin is going to preempt the move of money printing. And also, I think tech and AI stocks are in the same boat as well. Anything that doesn't need a bank loves financial crisis. Tech companies don't need banks. They have essentially infinite profit margins once they've created really good software. And they don't need to finance their CapEx through the banking system. They love printed money. Crypto is the antithesis to the TradFi system. When printed money happens and you debase, the value of time and human labor, we rejoice and we say, great, fuck you, we're going to take Bitcoin to 1 million, right? So I think these are the two sectors that will, even if there is a financial crisis, will be very well owned and will probably preempt the eventual money printing response.
I was trapped inside a cage made out of the daily grind.
I was so unfulfilled. I felt like a blank sheet of A4 paper.
Something was missing from my life, but I didn't know what.
But then I found what I'd been missing.
The Coin Bureau deals page was the answer to my prayers.
It had everything I needed to make me complete.
Exchange sign-up bonuses of up to $50,000.
The biggest discounts on the best hardware wallets.
Trading fee discounts of up to 60% on the best crypto exchanges.
Exclusive altcoin alpha.
Thank you, Coin Bureau, for bringing me back to life.
So it sounds like from speaking to you now that the next bull market could possibly come from the repercussions of what we see across America now. Is that the case, or are you expecting the bull market to also come from other factors?
There's also the halvening, and people have a lot of theories about how that affects mining supply. But I think, and there's also sort of like, does crypto fit in with AI? I know I've been out there pushing that sort of narrative, like an AI needs to use decentralized money and decentralized compute power, decentralized storage solutions, if they're really to be a pure economic actor that sits outside of, how we humans do things. So that's a potential vector as well. And then, yes, I think that we're going to print the most amount of money ever in human history in the next, 2 to 4 years, because we have a lot of elections coming up. And how do you get reelected? You give people free shit that they don't pay for in an obvious fashion. They always pay for it. Inflation or taxes, choose one. And then we have a lot of wars. Wars are very inflationary. Everybody around the world is increasing the defense budget to throw bombs at each other. And then we have the money printing to pay for the war, right? So it's all building itself into a super cycle of technology and money printing that I think is going to make this particular crypto bull market the biggest one that we've seen in terms of gains of $1 trillion of market cap that is, all of a sudden going to be present in our little ecosystem.
So we've touched on the US, but also we've got China as well. This is another powerhouse economy that we have to touch on. Is China screwed at the moment when it comes to the economy essentially potentially having to print more stimulus? And are they even in a position to do that, to get the economy moving again?
So I think one thing that people get wrong about China is because it has a closed financial capital account, they're not actually going to experience a Western style financial crisis like a 2008 or a 1930s, right? Because the financial system mostly is owned by the government. So it's essentially a choice. It's a political fight between factions in the Chinese government of who takes the loss, right? We inflated this thing called the property market. We built a lot of stuff for people. We've taken a lot of people out of poverty, but we overdid it a lot. There's a loss there. There's a bunch of stuff that was built that's not being used, and it will never be used given the demographic situation of China as it is today. So which arm of the Communist Party takes the loss for this? Is it the banking system? Is it the central bank? Is it the central government? Is it local governments? So this is what you're seeing is this patchwork solution of how is Xi Jinping going to deal with all these political factions. Nobody wants to take the loss for the property market. So is China screwed? No, the most likely outcome is China becomes, Japan-like 20-year nothingness. But, the Communist Party probably survives. Chinese cities will have nice restaurants. it's going to be all bad? Probably not. But is there going to be this explosive 8% GDP growth every year? No, because they can't tolerate the amount of credit that it would take to create that. Because they know that if we overstimulate, then we have real pressures on the currency. So yes, I do think Chinese stimulus is coming. The PBOC has already printed hundreds of billions of dollars and tried to loan it out to people to revive the property sector. I think they're going to go much bigger in terms of their stimulus, but only after the Federal Reserve starts cutting rates. Because what they don't want to have happen is China goes nuts on stimulus, and that puts pressure on the renminbi to weaken to the point where it can encourage this capital flight, which isn't good for the Communist Party. So let the Fed ease, and then the Chinese government can ease along with the Fed, and then they can keep the renminbi stable on a relative basis versus the dollar. So yes, they are stimulating. It's making its way into the markets. The big bazooka is coming out, but only after the Fed starts cutting rates and printing more money.
And in 20 years from now, China's economy is not going to look like the economy that we kind of know from growing up.
Yeah, it'd be worse. It could be better. Who knows? Doesn't really matter.
Okay, so what about Hong Kong? Because Hong Kong is opening up to crypto a little bit. Are you expecting Hong Kong to be one of those come-ups that is a little bit more appealing than the rest?
I think Hong Kong is going to be competing with New York to get crypto funds. But obviously, they're not going to compete with Western fund managers who, by and large, are shunning anything China related because they view it as uninvestable for political reasons. But Hong Kong is the conduit for mainland Chinese capital to go into a it's not a free market, but it's freer than the Chinese capital markets. And so I think that if they face the issue where Chinese people are like, oh, there's going to be all this money printing, we need to get into an asset that protects it, rather than them actually owning Bitcoin, there'll be a conduit for them to invest in, spot ETFs listed in Hong Kong that are run by Chinese asset managers, which are owned by the Chinese government. So do people think that they're escaping the financial ruin of a fiat debasement, but they're actually just handing their money to a government proxy and the money stays in the system. And it's the same thing in the US, which with the BlackRock ETF, that is a proxy for the US government. If the US government ever needs to go and confiscate all that Bitcoin or change the rules and sequester it and make sure you can never take it out, stroke of a pen, there you go. And there's no more Bitcoin that's accessible in those investment products. So same product, same aim, different packaging, different marketing.
We have to dive into the spot Bitcoin ETFs a little. First of all, how many times do you think you've said the word spot Bitcoin ETF so far this year? Because I know people have been quizzing you on it a lot.
It's great. I mean, I think it's a great thing that we've created this new financial system, and for 15 years, it was ignored. The Winklevi twins filed their first ETF application in 2013.
Yeah.
I don't even know if they got one in the end. 10 years later, Larry Fink files his in June of 2023. 6 months later, he gets an ETF, right? And so that tells you all you need to know about what this ETF is and who is behind it. Is it a crypto native thing to help, expand the financial freedom of the world? Absolutely not. Is it a way to sequester fiat dollars that want to earn a return in fiat using what they think is new technology? Absolutely. It's a trading product. It makes fees for BlackRock and Fidelity and all the other major asset managers who've scooped up. I mean, you probably know the numbers better than me, however many billions in AUM over the last 4 weeks or so.
Yeah.
So it's been the most successful ETF launch in capital markets history. That should also tell you what is the problem that it's supposedly trying to solve, which is a global race to how much money can we print. And it's not an American issue, it's not a China issue. It's everybody's doing the same thing at the same time. And this is just one way for the authorities to try to control where that fiat goes. Because if you actually buy real Bitcoin, then it's out of their purview. But if you buy a BlackRock or a China AMC ETF, perfectly within their view to see what's going on, who owns what, and make sure that when the time comes, that money is subject to taxation via inflation as well.
Is there a risk that we're killing Bitcoin with the surge of traffic for spot Bitcoin ETFs, institutional demand coming through? Is Bitcoin still the money of the people?
I think so. And again, I don't think the response, if you're afraid of BlackRock and some of these other managers, is to say we need to ban them from owning Bitcoin. That's not how Bitcoin works. It's a permissionless system. Anyone who wants to own it for any purpose is allowed to do so. If we want to maintain the progress of super hard crypto money, then we're going to have to become active. The best part about owning Bitcoin and why the community is so strong is because people care about it and they do things. Now, BlackRock is a apathetic money manager. They don't do anything. They collect assets and charge a fee and sit on them. They're passive. So they're not going to do good things and they're not going to do bad things. But they're not going to have Bitcoin move out of their custody. Unless, and maybe there's some bond or something they buy. I doubt it. But that Bitcoin is just going to sit there. So the more Bitcoin they accumulate, the more Bitcoin that's never going to move and never going to do anything. Obviously the large whales in Bitcoin, they're not spending money all the time, but if you take a look at what the investments of people like Roger Ver and the Winklevi and some of the other large Bitcoin holders were doing back 10 years ago, they were investing in companies, giving people Bitcoin to build services to create an ecosystem that made the Bitcoin that they still retain more valuable. Is BlackRock going to do that? Absolutely not. They're going to sit on the Bitcoin and charge a management fee. So it's the same problem with capital markets where passive index investing is killing price discovery, because you invest in a company, you invest in an index, and the index invests in the highest valued stock, whether or not that stock earns its rate of return. Similar things could happen with Bitcoin. It's up to us to actually do stuff with the network and things like ordinals, where people are, bringing JPEGs to Bitcoin. I think it's a great thing. I know some people think it's trash that's on the blockchain, but at least we're using it. If ordinals are the only thing that keeps people using Bitcoin and spending Bitcoin, that's the best thing, because now we have the miners have income in Bitcoin for people using the network that they're there to upkeep, versus BlackRock and other asset managers. All they want to do is sit on assets and charge a fee.
Yeah. Is there a size at which you're like, okay, if BlackRock's spot Bitcoin ETF gets this big, then there is a risk to the Bitcoin network? If it's too big, it could.
I haven't. I'm sure somebody could tease that out if there's a particular. So I have no idea.
Okay. So let's take a little look now. So I want to ask, in your experience, when it comes to the most kind of middle finger, fuck you to the TradFi system, what has that been in crypto's journey? Was it the inception of Bitcoin? Has it been something along the way? You've obviously had a lot of whys since you've been in crypto, and you are kind of a vigilante in the space. What has been the biggest kind of fuck you to the traditional system?
I would say all the dog money coins, the Doge coins, the Shiba Inu, dog with hat. Like, literally, if you take the collective dog money ecosystem, it's probably market cap of, I don't know, close to $100 billion. Like, these things are literally like so stupid and hilarious at the same time. And they're worth all this money, and they trade, hundreds of millions of dollars a day of trading volume. It's BBC people who've taken their shitty fiat paper shit money and said, I'm going to buy this fucking dog picture on the internet. And this dog picture is going to be worth a lot of money. And some people have made generational wealth buying and holding fucking dog money. Like, it's hilarious. I think that it just shows the worthlessness of this thing called fiat money, and the extreme that what was a great invention at the time, probably back a few hundred years ago when governments started using paper money, has now become this perversion where everyone is just racing to print as much of it as possible and degrade the value of human labor in the countries in which it's printed.
I spent about 2 hours yesterday trying to find a dog with bobble hat for this interview for this exact purpose. And I used to be a TradFi reporter. So we're in a parody in ourselves. We all love it. Okay, now I want to turn to ask you about FTX. And it looks like it's on a path to pay out all of its users. Have you expected this outcome? What is your outlook on the situation?
So obviously, FTX is just like any other company, which becomes very illiquid, goes insolvent, and then when everyone recognizes it's insolvent, goes to bankruptcy. And usually, a lot of the times, the bets were correct. It's just that they were over leveraged. Now, in Sam's case, they just stole a bunch of fucking money, and then bought whatever they bought, some of which have gone up in value in terms of tokens or Anthropic or some of these things. But again, it was a liquidity crisis. And what sparks a liquidity crisis? When you raise the cost of money, the price of money. What did the Fed and every other central bank do from 2021 until 2022 until today-ish? They raised the price of money. And we see FTX, we saw Terra Luna, we saw banks fail, like all these over-leveraged institutions, whether they're crypto or TradFi, they used too much leverage, but the leverage was using to buy illiquid assets. then you're at risk of going bankrupt. And that's exactly what happened with FTX.
And the certain claims exchange that has closed up shop as well. What's your take on that? Have you expected and think that's the reason that we are seeing them move away?
I mean, Kyle and Sue and Mark Lamb are all a bunch of fucking Muppets. So even if FTX didn't pay, even if they didn't pay back users, I knew that exchange was trouble from the start anyways.
Okay. So now let's move on into 2024, the Wen Lambo series, right into the moon. Trading some shit coins. We got to talk about it. So first of all, what is some of the, let's say, tokens that you're most excited about this year? Maybe let's start with like a trading perspective. If there's any that you're like, okay, you mentioned Dog with Hat as like, this is just a parody in itself. What kind of things are you looking at as potential narratives in the space for 2024?
So obviously the Solana ecosystem is super vibrant, super vocal, having a lot of fun trading. And the coin's gone from I think $7 at the FTX lows, and now it's 110 or whatever it is. I think there's a lot of energy there. I ultimately think Solana is a dog shit blockchain. Doesn't matter, but people like to trade it. People are vocal about it. People hate it and love it. And you want energy, you want pathos. That's what you're trading. You're trading the human emotion, as evidence in the chart. And so I love Solana as a trading vehicle. The great thing about crypto is because it's such a free market that's devoid of all of the central bank fuckery, it actually trades pretty technical, and it trades very on a human psychological level. Big numbers like 100 mean something, or 200 or 250, right? That, and in an abstract way mean nothing at all, but it's a bunch of humans trading against each other, and without any manipulation, they're going to veer on these particular points. So I love trading things like this. So I think as my favorite trading shitcoin, definitely really Solana. I'll be trading it up and down, sideways, whatever, throughout the whole cycle.
So you trade on Solana, but you wouldn't necessarily build on Solana. 11th outage was a little sus.
Yeah, exactly.
Is this still a time and an opportunity to accumulate crypto? Because I think people that are watching from the sidelines will always wonder if they have got in that little bit too late. Markets right now are pumping. We've seen hovering around 50K for Bitcoin this week. Are we reaching the peak of this bull market, or in your eyes are things just starting, just heating up?
I think we're just starting. The real bull market starts once Bitcoin surpasses 70,000 and essentially the whole crypto market cap in aggregate passes what it reached in 2021. I don't know how many trillions that was. That's when things start getting silly. That's when you start seeing all the celebrities and all the influencers start peddling whatever piece of dog shit that they're getting an allocation on. That's when we know things are really heating up. Is it too late? Well, again, it all depends on what is your investment horizon. What do you want to do with this money? Is it, I want to make 1,000x in the next week? Maybe it's too late. You're probably gonna lose all your money if that's how you think. Is it, I want to beat the inflation and fiat debasement starting today? Great. There's Bitcoin, there's Ethereum, there's others mega cap cryptos. Maybe they're not going to go up the most because of the law of large numbers and diminishing returns from now until the top of the bull market. But at least you'll beat inflation. You'll have one of the best performing assets, versus stocks, bonds, real estate that you could own. Again, I think it all depends on what it is you're trying to do. And there is no easy button. Obviously, everyone on crypto Twitter and TikTok and Instagram wants to say yeah, I started driving a Lambo 1 week after I started trading. Maybe you should join my paid group. Don't do that. That's how you lose all your money very, very quickly. Anyone who's good at trading spends all day trading, and it's a full-time job. There is no path. There's no shortcut to this. So I think if you're thinking in your mind, I need to make 1,000x on the next crypto I buy in the shortest possible amount of time, put down your Trezor or your Ledger or your MetaMask and go outside and go for a walk. Don't trade crypto because you're gonna lose all your money.
Crypto bros and gals going and getting fresh air, that ain't gonna happen. So maybe a crypto fuck up, because I think this is always something, you've been in the space for a very long time. You are a crypto OG. Everyone can make crypto mistakes. And I think people can watch shows like this and say, you know what, I want this lifestyle. I want to trade. I want to get rich quick, but it's not that easy. For everyone watching, it is not that easy. What has been some of your life lessons along the way? Maybe something that you can share.
So I always tell people in crypto, everybody's trying to fuck you. Don't trust anyone. And I think if you go into it with that mindset where, okay, someone tells you something, you're not going to call them a liar to their face. Say, oh, thank you very much. And then you go back and you verify that statement on your own. Don't take anyone's word for anything, no matter who they are or what program you saw them on, or, Vitalik loves them, or, they claim they were Satoshi, whatever. It doesn't matter. Do your own research and you'll save yourself a lot of issues. And if you feel like in the pit of your stomach, that doesn't really feel right, I don't know why, just don't do it. There's no one who's forcing you to click that last confirm on MetaMask, who's forcing you to put your password in to a site that you don't recognize, who's forcing you to click on that email phishing link, right? That is something that, you just have to listen to yourself. And I think that most people have the common sense to know when something just doesn't really feel right. If you don't understand something, don't do it. That's how you avoid most of the mistakes in crypto and most of the people trying to scam you and steal your money.
Excellent words of wisdom there. So if we go back, there was one of your recent posts, Points Guard, which was amazing, by the way. And you'd written that EOS was an example of a ICO craze that worked because it raised a lot of money, around 4 billion, but it was a complete piece of shit blockchain that barely worked. Do we have any 2024 EOSs? Anything that you're
Not
like,
yet.
Not yet?
Not yet.
Okay.
EOS and Block1 guys are absolute geniuses for how they pulled this off and how much money they extracted from the community doing this ICO sale that they did. There will be something this cycle. I don't know what it is. I think there's going to be some point scheme, something, and it's going to be massive. Maybe it's going to have some sort of AI tint to it. It's going to be some economic game that they're playing with your mind, and everybody's going to want to participate. And the amount of money that they raise is going to be stupendous. What they claim they're going to do with the money is going to be stupendous as well, right? They're going to have some massive vision about what they're going to do with this money. Maybe it's, Sam Altman said he's going to raise $7 trillion to build some specialized semiconductor fab for AI. Maybe there's going to be a crypto analogous thing. We're going to raise $1 trillion to do something in AI to compete with OpenAI and, Microsoft and Google and whatever it is, right? Something big. It's got to be a big vision. We have this new way of potentially, raising funds, the point system and any derivatives that people create. I think we'll start to see something like that probably in 2025. And once we know what the narratives are people care about, the new way of fundraising that people are getting behind, and then you combine those two together, and then you get an EO style complete piece of dog shit that people will raise money, and they'll raise maybe this time will be hundreds of billions of dollars. I don't know. It's going to be insane.
And how can people detect the bullshit? So you've mentioned that it's kind of like, don't trust, verify. You've got to do your own research. But is there also a way that you can be like, okay, these kind of buzzwords, these are no-goes. These are things that says little waving of a red flag over here in the corner.
I think you get that sort of perspective if you start reading white papers of very successful projects, like read the Bitcoin white paper, read the Ethereum white paper, and see the types of things that they're doing and that they're not doing. And usually the projects that are the most scammy claim to do some amazing things that very well-respected cryptographers and engineers have not been doing. And maybe they either haven't been doing them because they can't, or there's a very good reason why they don't do them. And obviously that's up to you to determine the difference between the two. But when you see a very heavily marketed, slick founding team out there promoting something and having some audacious goals in crypto, your lights have, alarm bells have to go up. Like, engineers aren't that good at marketing. And so there's a reason why the EOS people had some very famous people flying around the world giving, talks to villagers to buy some fucking EOS, right? Because it was a marketing game. So when you detect that you're being marketed to too heavily, like, that doesn't really seem right. Like, good tech can be well marketed, but it usually isn't the best marketing that I've ever seen. And that should give you a bit of pause.
So inverse the marketing strategy, because the real true tech developers, normally the UX UI is a little sus. Okay, that is
not
a
even
great
UX
tip.
UI. It's just how people are promoting it to you, what they're claiming they can do, what are the channels that they're going through to get this money. And yeah, again, if it seems too good to be true, it almost certainly is.
Now, I listened to your recent podcast episode with Laura Shin, and you said that Bitcoin is the only real crypto money. Ethereum is the decentralized computer. So I was curious to pick your brains and see if we could finish a few more of these sentences. So what would you
Sure.
say Chainlink is?
A pseudo price thingamajig. It's not
Thingamajig.
decentralized. It's not decentralized. It's not all that fast. There's issues with data reliability, but maybe, I'm not a link marine. I'm not really I haven't really followed the protocol for that long. But yeah, so that's what I call the, data thingamajig, because I don't really know what it is.
The data thingamajig. What about Cardano?
Who gives a fuck? Zero. A bunch of wannabe Ethereum, the first wannabe Ethereum, and maybe the first one to go to be irrelevant.
Dog with hat.
Best dog money of this bull cycle.
Best dog money of this bull cycle. Excellent. So Pepe is obsolete now. Pepe's so 2022.
Well, rare Pepes are rare Pepes. They're original, crypto art. I love my rare Pepes. I think we're going to see resurgence of NFT trading volumes at some of these early projects. We'll get back through the floor prices that they were experienced in 2021. But I don't think rare Pepes are trying to be, super funny dog with hat, dog money memes. They're memes in and of themselves, trade of cards and whatnot. But I wouldn't put rare Pepes and dog money in the same category, because dog money is way more liquid, than a Nakamoto Pepe, right? There's only 300 of them. They're held by random people. You kind of have to like the art, versus dog with money is, well, it's really funny, and fuck you, Goldman Sachs, I'm going to buy this dog with hat, and maybe put it on the bull downtown in New York City because it's funny. Versus I need to find a specific person who likes this Pepe that I kind of liked in the past and is willing to pay me a lot of money for it. It's a lot harder to trade.
Got it. Now, so I would love to just recap with an exit strategy for retail investors, because we've talked about, your view on the macro look, what that could impact on crypto prices. We've talked about some of the individual tokens, but at the end of the day, this is a numbers game, and you are in crypto to make money. Everyone is in crypto to, if you end up holding your bags for a whole bull cycle, you've kind of wasted your time and you've got another 3 or 4 years wait. What would you advise for a retail investor, their first or second crypto cycle? How should they exit and take some profits throughout? What kind of price points? What kind of indicators? What would you expect?
So the first thing is you need to set a goal for yourself. Is it, I want to trade or purchase a crypto and buy my own house, and this is how much the house is going to cost. This is where it's going to be, right? When you get to your goal, sell your crypto and buy that asset, right? You've done what you need to do. The last thing you need to do is once you've reached the goal, change the goal, get more extravagant, and then all of a sudden, I'm going to take more leverage, going to trade bigger, and that's when you run into problems, right? Because you're never going to pick the bottoms or call the tops. But if you've established a trading and investment plan, stick with it unless there's some event that is forcing you to change it. You want to buy a house? You made enough money to buy the house? Buy the house. You wanted to buy the car or whatever it is that you wanted to buy, set a goal for yourself. Don't just say, I'm just going to trade crypto. So for me personally, what's my goal? I like skiing all day. I like a particular lifestyle. I don't want to have to go into an office ever again. Okay, I'm going to make sure that how I trade my crypto gives me, passive income. That's why I have a lot of derivative DEX holdings that pay staking fees, right? They're not necessarily going to be the things that go up 1,000x, but they're not necessarily the thing they're going to go to zero because nobody uses them, right? Because I have my trading plan, my goal. What am I trying to get out of this? I want control of my time. This is how much my time costs. Make sure that I can meet those goals. So I think you're never going to be able to time the market perfectly. It's not going to be the same thing that happened in 21 that's going to happen in 26, 27 is when I think that the market's going to top out. But you can control your plan. You can control when you take money off the table to purchase that asset, or you needed to have a particular type of income stream to quit your job. You've achieved that. Okay, put your money into whatever you perceive as either a safer crypto, a safer investment vehicle, whatever it is, and do that. So I think make sure you have a plan when you start, and then when you get to the goal, cash out.
Stick to the plan. Don't get greedy.
Exactly.
And finally, it's important. It is, because I remember 2017, everyone was all eyes on Bitcoin at $10,000, and it just skyrocketed past 217. But None of us took profits because as soon as it hit 15, we thought 20K was incoming right here. So it happens to everyone. Now, here at CoinBureau, everyone is big fans of you and your work. So one final question from myself and the rest of the CoinBureau team. When book? Can we expect a book anytime soon?
No, books are hard. I actually really like the essay format because I get to, when I have a feeling about something I want to write, I just write it. I have no word count. I'm not trying to sell anything. A book, I need to have a constant concept. I got to get an editor. It's, if I'm going to put out a book, I want it to be very, very good. And I don't really have a centralizing theme that I want to write something about. And writing a book takes a long time. So by the time you write it, if it's about some sort of current event, that current event probably already happened, right? So I don't know. I don't know what I wanted to write about if I wrote a book. Maybe it'll happen at some point in the future, but I really like the essay contemporaneous, word salads that I put out there on my blog as a way to express myself and give myself confidence in the trading positions that I already have on before I wrote it.
And also, I can never call what your next essay is going to be called. So I don't even know how you would start by titling the book, to be honest. That would be a multi-month task in itself. Amazing. Arthur, thank you so much for your time. It was an absolute pleasure to pick your brains, and I really appreciate it. Thank you.
Thank you. This has been great.
That's all for today's video. If you learned something new, let us know by smashing that like button. If you want to keep learning, then subscribe to the channel and ping that notification bell so you don't miss the next one. If you want to help others learn, take a second to share this video with them. And if you're inspired by Arthur to start your investing journey, then check out the CoinBureau Deals page. The link will be in the description. Thank you all so much for watching, and I'll see you in the next one. This is Jessica, signing off.